and welcome to today's report, the 3rd of September 2025. Right, okay, so what's in store for us today? All right, today I'll talk about Trump's tariff ruled illegal and what it means for trade markets and the Fed. Now, a 7-4 panel of the U.S. Court of Appeals for the Federal Circuit ruled that most of Trump's reciprocal global tariffs and the separate China, Mexico, Canada, fentanyl-related tariffs exceed presidential authority under the International Emergency Economic Powers Act, or in short, IEEPA. Now, the court concluded IEEPA allows president to freeze asset or restrict transactions during emergencies, but it does not authorize new taxes. Since tariffs are taxes, right? So the court said only Congress can grant that authority explicitly. Now, earlier, tariffs such as Trump's steel and aluminum duties under Section 232 remain unaffected. The ruling is stayed until October 14, right, keeping current tariffs in place while the Trump administration appeals to the Supreme Court. So this is definitely not done yet, right? So what happens to tariff now with this new ruling? So until the Supreme Court rules, the contested tariffs continue to apply, keeping importers on edge. Now, the Trump team insists negotiations and trade discussions are continuing, regardless of the court's interim order. This legal limbo has heightened uncertainty for businesses, prompting concerns among congressional Republicans and business leaders who warn that repeated court rulings are destabilizing planning and confidence. And we have already seen it affecting the market. Okay, so there's also a plan B by the Trump administration. Now, Treasury Secretary Scott Bessent insists the administration is confident that the Supreme Court will uphold IEEPA, but he has also laid out Plan B if it doesn't. Now, Section 338 of the Smooth-Hawley Tariff Act allows tariff up to 50% for 5 months against countries that discriminate against U.S. commerce. It can be invoked quickly without lengthy investigation. As for Section 301 investigations, another possible path is using the Trade Act of 1974 to investigate unfair practices and impose targeted tariffs, though this process is slower and more complex. Now, the key points are tariffs are unlikely to disappear even if the Supreme Court rules against IEEPA. Plan B ensures that tariff-driven pressures on trade partners and US prices remains in place. Okay. So what's the market reaction for the stocks and Forex? For the stocks, immediate reaction is the ruling itself caused only modest move. Futures stayed flat, signaling a wait-and-see mood. Now, for these sectors, industrial, exporters, machinery, and consumer durables are more vulnerable to tariff uncertainty. Tech stocks with heavy China exposure, like semiconductors, like TSM, NVIDIA, they also face downside risks. As for volatility, a Supreme Court loss or sudden use of Plan B could revive volatility, while an affirmation of tariffs might calm markets. Investors are trimming risk exposure but not capitulating. Okay. So for the US dollar, the dollar dipped to a 5-week low after the ruling, then bounced as safe haven demand supported it. As for the medium term, traders expect range-bound trading with sensitivity to legal developments. If tariffs vanish, the dollar could weaken on lower inflation and earlier and easier Fed policy. If Plan B kicks in, tariff pressure persists and the dollar stays supported. So as for implications for Fed policy, the Fed will also watch these developments closely. Tariffs are factors in the inflation outlook. For the upcoming meeting, which is the September 16 to 17, then October, followed by December, we have 3 more FOMC meetings. Markets had been betting on the Fed cut rates in September, over 80% odds at writing due to softening inflation. But the expectation has already been tempered by sticky services prices and Fed's official caution. The added twist of this tariff dispute keeps policymakers vigilant. Now, the tariff ruling by itself may not dictate the rate decision that will hinge on inflation and growth, but it does add uncertainty to the picture. So any resolution of the tariff saga or escalation under a Plan B will be a wild card for inflation and thus for the Fed's path. At a minimum, the Fed's official will note this as another risk to financial stability. Now, this September's dot plot would be crucial as an interest rate guide for the rest of 2025. Okay, so like in a nutshell, what just happened basically added more uncertainty to the market, and the market doesn't like uncertainty. So though there are not what we call big, huge movements yet to the market, but this kind of news is not going to help in terms of assuring what investors should or should not do. As such, right, we will expect more, spikes, whether to the upside or downside in the market. If you look at the S&P 500, is basically flat, moving sideways in the longer term, and so is the US dollars. Now, since August 13, right, mid-August to right now, we are at the 3rd or early September. Largely, the US dollar index has been moving in a sideways motion, up and down and up and down. Okay, so this kind of things is not going to help a lot in trading. That's why, as I say, you have to stay vigilant, be very, very sensitive to any, the court rulings, announcement by the Treasury Secretary, Trump, and anything, because it can move either way based on the announcements. Okay, so with that, stay vigilant, and that's the report for today.